Thanks for joining me on my market report. My name is Mike, and this market report is on mortgage rates. We like to kind of go over what impacts them on a daily basis, whether they're trending upwards or downwards. What the week's data that's supposed to be released it could impact rates for the week as well. We kind of try to give you a little insight and guidelines as to what to look for the week and even short, long-term uh, levels as well. So we don't get into rate quotes. There's plenty of other sites for that. However, if you do want rate quote, I am a loan officer and do work with the national lender, so I'd be more than happy to work with you on quoting rates. There's just too many variables that go into pricing a rate, as well as, of course, different rate loan programs. So with that information, it's just easier to get your specific data, your specific information that we need to be able to generate a rate quote. Uh, Make it a little bit easier for you. But if you guys got questions regards to programs or the rates or anything along that line, and we can help out, we'd be more than happy to. So please feel free to just reach out. If you find this on a website, so just go ahead and just direct message me. It'll be the best way to contact me. I'll be more than happy out. I'll try to get something out there soon regards to a place where we can lead you towards if you have questions or whatnot. But for the time being, why don't we just go ahead and reach out via direct messaging would be the best. So without further ado, let's go ahead and just jump right into it. We'll start off with today's economic reports. If you've been watching my videos, we've been talking about this week. The catalyst will be jobs data for the month of June. So yesterday we had the ADP number. Today we got the initial jobless claims, which for last week. So the last week's report came in at 411,000 initially. However, that was revised slightly higher to 415,000. Now, this week's report was forecast at 390,000, but it came in at 364,000, which is obviously very good news that we're seeing a decline in jobless claims. So these are pretty strong for the most part. And even the Challenger layoffs, which basically is a announced layoffs that are going to be coming in, even that's dropped from 24 million down to 20 million. Now, continued claims, however, this is kind of disappointing because last week's data was at 3.39 million, and it was forecast. I mean, it was actually revised higher to 3.413 million. So, and actually went higher from that this week to 3.469 million. So that means more people are still staying on unemployment. We'll have to kind of watch and see as some of these special incentives from the stimulus are start coming away. If that might help, I think push people back to work. That has been a issue, as you'll see with the ISM here. Uh, Went from 61.2 back in May to 60, forecast calling for 61, and a little bit lower to 60.6. This is the manufacturing. So again, kind of like what we've been seeing, a lot of different industries that supply and labor shortages are kind of the root of issues. So we got backlog on the manufacturing side. We got plenty of companies in. Uh, Anything above 50 is considered expansion. So this is still a solid number here. However, it could be better if we had obviously the labor and the bottleneck in the supply chain hasn't been tightened too much. So, but we are kind of expecting a lot of people are kind of projecting that by end of summer this could get a little bit better. We're starting to see some prices come down a little bit. I believe lumber prices has dipped a bit further, which is good news for those doing home remodels and builders. Of course, they need much cheaper because that's obviously getting passed on to the consumer. So all around, we'd like to see some of these prices come back down a little bit. Last but not least, we got construction spending for the month of May. So April, it rose 0.2% initially. However, that got revised slightly lower to 0.1%. Forecast was supposed to pick up at 0.4%. However, it dropped by 0.3% in the month of May. Let's jump over headline news. Stocks are a little mixed. Nasdaq, of course, is the lone index in the of the three that's in negative territory. As you'll see ahead, yields have been climbing up a little bit. As a result, that's kind of pushed Nasdaq down, as those are mostly growth stocks. And anytime you see costs going up for stocks like growth stocks, that cuts into their profits, and that's investors kind of usually kind of move away from that. We do have a few Fed speakers speaking today, and of course we will be listening to see what they have to say if anything comes out from the message we've been receiving. And then we also got OPEC Plus. meeting up, and there's talk about them maybe cutting back on about 500,000 barrels a day on there. So maintain oil prices. We are seeing a little bit of a spike in oil prices. They're up to about $75 a barrel now. And then also the WHO, they did announce that there was a 10% spike in, even though there's about 10 weeks in a row, declining case numbers in Europe. Now got a 10% spike in over the past week in Europe. So with that new variant going around, investors are kind of watching that to see if there's any new lockdowns that might be on the horizon. So that's something to watch in the future. But for the most part, we'll have to kind of watch and see how this will be treated going forward. Let's take a look, see what's going on with mortgage rates today. They're down about 6 basis points. And as you can see here, we're way up here. We did pull back. We ended up closing down about 2 basis points yesterday, right at approximately where this 25-day moving average are. We did going up a little bit earlier today, but have and even further down. We're kind of this uncertain territory, which means you try going higher and then try going lower, but now it's kind of sitting in the middle. We are kind of looking at a possibility of a lender pricing change, as lenders may come in a little worse pricing, primarily because we were up a little bit higher yesterday when rates were announced or rate sheets came out, and then ended up closing 2 basis points lower, and now we're down to about 6 basis points. So if we could keep continuing this downward, you may see some lenders coming in with reprices for the worse on this. So this is something to watch for. It hasn't been done yet, but it's something to watch for. Yesterday, if you were watching, you heard me that we were when I did this, we were getting this kind of like this uncertainty. We were reaching at levels the high levels, and all of a sudden the yields we're at certain levels where we usually have a trend reversal, so to watch out for that. And we were starting to get that a little bit yesterday at the very end there, and then look like today it could continue. But tomorrow again will be the catalyst for that, and with the jobs report by the Bureau of Labor Statistics, so be cautious as to what we get. They're looking for Goldilocks. They don't want something too hot and not too cold in terms of the jobs numbers, because they don't want the Fed to pull back too much on their tapering and then talk about inflation. So that's why they want to have more of that Goldilocks, where it's just not too hot, not too cold. Now here's the Treasuries. It did rise up about 1.48, just under 1.48. As you saw, we tested this. We did pull back a little bit. These are levels, as I indicated yesterday. Once we hit that, we rise up. We come back down, hit that, and start going back up again. Now we hit this again yesterday, and we could potentially see it coming back up again. So again, be prepared for some volatility going ahead. But as of yet, pricing is about the same as yesterday, but that could change if if the markets continue to worsen a little bit for mortgage-backed securities and yields. All right, folks. Again, if you guys got questions about anything, please feel free to reach out. Love to be able to talk with you guys and answer any questions I might answer. If you guys like these videos, please help us out and smash that like button. It helps us get noticed a little bit further on the search engines on YouTube and such, and certainly helps us out a little bit. We greatly appreciate it. Thanks so much for watching. We look forward to see you guys in tomorrow's video, and have a great rest of your day. Bye-bye.